A hawkish pause. Fed officials, as expected, raised their target rate by 25 basis points to 5 to 5.25%. But they go on to suggest that the longest and the steepest tightening cycle since the 1980s may be about over. The statement drops wording anticipating some additional policy firming, now saying the committee will closely monitor incoming information and assess the implications for monetary policy. In determining the extent to which additional policy firming may be appropriate, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. The vote was unanimous. The economic summary notes a modest pace of growth in the first quarter, robust gains, job gains, and still elevated inflation. Lisa, don't worry about the control search function because there's no change in their estimate of the financial stability situation. They go on to repeat the U.S. banking system is sound and resilient. Tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects is uncertain. The committee remains highly attentive to inflation risks. And finally, no change in the pace of QT, still capped at $95 billion a month. A short, sweet statement, but it does suggest that we are going into a possible pause.